Joining me now with more is NYSE Senior Market Strategist Michael Renking. Michael, great to have you.
Great to be back.
So much to talk about, especially this morning. As always, let's start with the Fed. What were your takeaways from yesterday?
Yeah, so I think, a lot of the what you have to think about in terms of what we saw yesterday is the expectations that markets had coming in. There was, since November 21st, when New York Fed President Williams kind of really suggested there was further room to ease policy, markets had readjusted expectations that we were going to see a cut, but that was deemed to be a hawkish cut where you were going to see the Federal Reserve really kind of raise the bar for further rate cuts going forward. Now, we've heard from all of the Fed officials, and there were kind of disparate views kind of across the federal, kind of across the committee, right? And we saw that was largely delivered yesterday, right? We saw there were 3 dissents, 2 preferring no cut, and 1, Stephen Moran, continuing to push for a 50 basis point cut. But the language, kind of that Chair Powell used, kind of throughout the press conference, and the fact that we got a balance sheet management adjustment by the Federal Reserve that was bigger and earlier than most people had expected. Kind of the markets had a dovish takeaway coming out of that, and we really saw kind of a risk-on environment, kind of throughout the day. In equity markets, you really saw that in the equal weight version of the S&P 500, which pushed to fresh highs, and then small and mid-cap indices. You had the Russell 2000 push to a new all-time high.
Fed Chair Jerome Powell's term comes to an end in May of next year. Has that started to factor into the markets at all? Yeah,
so I think if you look at where kind of probabilities are for the next 3 meetings that Chair Powell will be leading, right, markets are looking for about a 50-50 chance of an additional cut, right? We have heard the president, narrow the field down, right, and the odds-on favorite is Kevin Hassett to be the next Fed chair, right? And so, markets are starting to wonder, do we begin to lose some of that Fed independence as we move into next year? Now, if you look at the disparate views on the committee yesterday, right, there were 6 officials that preferred no cut, right? And so we only had 2 official dissents on that side of things. That's largely happening at the Fed president level. That is where we may see some of the politicization of this process, as those presidents are up for renomination in February, right? And so that's something that we'll have to kind of pay attention to.
I want to talk about AI. Time today naming the architects of AI as its person of the year, and we'll be seeing more coverage of that with Time, of course, on site, including its CEO Jessica Sibley throughout this hour. Michael, where do we stand in the AI trade?
Yeah, from a market perspective, AI has been the trade of the year for probably the last 2 or 3, right? You could very much make that case. But that trade is starting to evolve, right? And it very much kind of started out in the picks and shovels of that. Kind of in terms of servers and chips, right? Now, those stocks have continued to perform really well, right? But now we're seeing it kind of broaden out, not only to kind of the energy infrastructure and the data center build out, right? So you're now starting to see it, move into more of the networking stocks, utilities, right? And then I think the next evolution of that trade, as we kind of move through that process, is going to be kind of the adoption and as you see companies begin to use, kind of AI in kind of the day-to-day workflow, and and as that starts to help productivity and then drive, kind of gains on the bottom line.
And let's talk about what we see in the price action, because we know since a few years ago, these AI stocks have been hot. They've been very risk-on sectors, if you will, I think, as you referenced earlier there, Michael. But more recently, we have seen questions about valuations come to the forefront. What does that signify?
Yeah, so I mean, there's been a lot of parallels driven to kind of the late 1990s in terms of kind of the technological revolution and then kind of the performance in those stocks. Now, the difference is this time around, all of the spending that's happening for a lot of this infrastructure, or most of it up until very recently, had been driven by cash flow from a lot of these larger companies. We're now starting to see that shift a little bit more to kind of debt markets, right? And that's kind of where some of the concerns are starting to kind of bubble up. You have the valuation concerns, but you're now also kind of starting to wonder about kind of some of the funding concerns, right? And you're seeing companies increase their CapEx, right? But that's not flowing into kind of revenues yet, and it's not flowing to the bottom line, right? And that's where markets are starting to have, a little bit more of a concern.
Let's talk about the CEOs that stand out in the AI space as we await those boardroom remarks from Time CEO Jessica Sibley.
Yeah, so I mean, look, Jensen Huang, is kind of the first name that sort of comes to mind, right? Is NVIDIA has been kind of the backbone across all of these kind of large language models, kind of up until this point. Their dominance on that front is starting to be drawn into question, and that's kind of also the dispersion you're starting to see within the marketplace, right? As kind of Alphabet's TPUs are now kind of starting to also be kind of brought into the infrastructure side of things here, and you're starting to see kind of other competitors to NVIDIA, right? But we continue to see just this massive investment, right? And kind of we're going to see this evolution, kind of start to kind of make its way through kind of the economy to companies. I'm sure you use it in your day-to-day life. I know I do as well.
What are the biggest questions when it comes to AI in 2026?
So I think, look, the biggest question is from a market perspective is going to continue to be kind of on this spending, right? Is there a kind of a misallocation of capital? I think it's a little too early to kind of draw those conclusions, right? It's sort of hard to separate from that AI factor, right? Because as we talked about, it started to broaden out within the marketplace, right? And so escaping that is going to be sort of difficult. The markets tend to focus on kind of the rate of change, right? And if we start to see that spending rate of change slow down, that's where markets can get a little bit concerned from that factor. But there are some really other kind of positive fundamental things that are happening kind of more broadly within the market going into next year. If you look at kind of the potential kind of potential tax refunds, right, and kind of the capital spending that's going to also come back into the reshoring of kind of in the industrial sector, kind of more broadly across the marketplace.
Michael Renking with me here in studio, the NYSE Senior Market Strategist. Michael, we'll see you down there on the floor to celebrate the architects of AI a little bit later.
Absolutely.